there, but also, what else were you to say?
Oh, no. Yeah, that was it. Just coverage, zone cover, corner. And you could press man-to-man, use the rangy arms. Yeah.
I played corner in Madden in 2006.
Yeah, you're pretty good, I was going to say. All right, so first of all, it's feeling toppy. Amelia just got back from a conference and is now laser eyes. Did you do it to your profile yet?
No,
your avatar? Okay.
not yet.
The first thing I want to get into is this Fidelity thing. They're going to hire 9,000 more people, which in a normal situation, like you'd be like, oh, that's great. But some people have a problem with that. But they want to hire technology people. They want to hire customer service people. They said 700,000 new accounts for investors aged 35 and younger opened in just the second quarter.
So that's the toppy signal?
Well,
I get it.
They've probably been opening 1 million accounts a quarter for the last year, if they're anything like everybody else.
Yeah.
And why wouldn't you hire
Right.
to? But historically, Wall Street hiring binges have not been a good time to buy stocks.
Yeah.
So I don't know. Does this stuff bother you or not really?
Macro level, I would say it doesn't bother me. We know, as you mentioned, that they're going to act reactionary in those situations, but there's just so much areas where we're seeing younger investors. That's the big bull with younger investors under 35 coming into the market. I don't think it bothers me at this point.
They're not going to. Younger investors might get hurt if the market crashes, but they're not going to stop investing.
No.
So it almost from Fidelity's perspective, it doesn't matter if this is a market top, because they're still going to need people to service these accounts.
100%.
Right. So like for me, it's not really a great signal of anything. If you tell me though, like Morgan Stanley or Goldman Sachs are hiring more people to churn out IPOs, for example, that would be different than we need more people to service accounts.
Yeah, and they're hiring in tech. That's an interesting space, and I think a lot of asset managers are focused on their digital asset capabilities. It's a good area to focus on.
Yeah,
Tech's
the only area, frankly.
Right. So that's, I think, a good thing. And if you look at Fidelity versus Robinhood really need the day traders, right, in order to survive. Fidelity, I mean, if we go into a bear market, they're in a much better position than Robinhood would be, right? Because they need the
asset management.
Yep. They have so many
401k.
business lines.
Yeah.
But
Exactly.
even if we go into a bear market, so I think, and I'm willing to change my mind if the evidence shows itself, because I am very open-minded, confident in my assertions, but open-minded, right, Josh?
Very confident in my assertions.
So
Shout out to Ben.
if the market falls apart and goes the other way, like I think Robinhood is the most addictive social media app in the world. So I don't think that these people are going to leave it, particularly because the average account size is $5,000, right? So let's say they get railroaded and they lose $1,700. I mean, that would be great, but I don't think they're going to leave. And then furthermore, they're just going to flip to leveraged bearish ETFs. Yeah. And there's always something going up, even in a wide bear market. Like not like March 2020, but
the activity will continue.
Yeah, like they're not leaving. No. So some of the people that like are just kind of dabbling, sure, they'll go away. But the people that are addicted, that are hooked, that have it in their pocket, that are swiping up 4 times a day, they're not leaving. I don't care what the market does.
This is Jared Dillian, who we know him, right?
I love Jared. I love Jared.
Dude, right?
I love Jared's spicy takes. He likes to kick the hornet's nest. He wrote a piece that the CFA is a colossal waste of time last year. So this is very much on brand for him.
Really?
Let me read what Jared.
I'd like to read that piece.
Let me read what Jared said. Is he at what was it? At
Daily Dirt Nap.
At Daily Dirt Nap. So you know what flavor the commentary is coming in.
Yeah, he's very who he is.
Right. Question. Quote. The question is whether this is a permanently high plateau of retail trading activity, or will a bear market cause all these new investors to become frustrated and give up? He says, "I think we know the answer."
I don't think we do.
Agree.
I don't think we do. I think.
Well, hold on.
The jury's out.
TD Ameritrade's Investor Movement Index, a measure that has tracked clients' positioning in the market since 2010, rose to the highest level on record in June. I don't know what's in the movement index. Is that how many times they're trading or how long stocks they are? Do we know?
I don't know what's in there. But so here's the thing. So what are signs of a top mean? Are we talking about a 15% pullback? Are we talking about like a top or the top?
Generational top.
Come on. I mean, that's really hard. That's really hard to call. I don't think that this thing is going away. I mean, if you want to talk about like, is the stock market frothy? Sure. Have we been saying that for the last 9? Have we been saying that for the last 9 years? Yes. Yeah. Every day? Yes. The same people, yes.
What's his tweet?
So Carter Braxton Worth, if we're looking for signs for the top, and you don't have to look very hard. You don't have to be Sherlock Holmes. He said for the month of August, we've made 10 new intraday all-time highs in the S&P 500. This hasn't happened in the month of August since ... That's my ... 1987. We know what happened in October 1987. The record number of intraday all-time highs in the month of August is 11, which happened. Oh shit! It happened in 1929. All right, we're doomed.
Is this a masterpiece tweet? He got 1987 and 1929
Yeah, this is
into the same 280 character tweet.
That's unbelievable.
This is chef's kiss.
It's very, very well done, Carter. The only thing missing here is like, I don't know, Black Plague or so,
15, whatever year it was.
right. Spanish Inquisition.
Also had many market highs. I mean, listen, this weekend, for the first time, I had my stepmother ask me about Bitcoin. I had my stepdad ask me about Bitcoin. So
You sell when they ask about NFTs. Bitcoin's like a blue chip at this point. Do you get a lot of your clients initially find you on social media?
Yes.
So they're seeing all this shit also.
They're seeing it.
So do you get questions about it or?
100%. There's a lot of questions about crypto, NFTs, just the whole space in general. And really,
No, I mean like the toppy stuff. Like, are they reading these people's tweets and like reacting or not really?
no, not really. I just don't think a lot of younger investors really care about. They see an opportunity to buy more. I saw that a lot when we had the initial pullback. There was just an opportunity. That's what a lot of people
should be.
Yes, they want to see the opportunity. So I don't think younger investors are looking at this as, even if they're not even seeing the signs, they're not worried about it.
younger investors should be on their hands and knees praying for a market crash every day, right? Like that, they should beg for the opportunity to dollar cost average into stocks as they go.
So
lower.
like right, because conversely, how does it help them if they have to put money into the market every 2 weeks in their paycheck?
Yeah.
Like to
buying less.
maximize their 401k, they're buying less
less.
shares every time. So you have 8 out of 10 intraday all-time highs in the SPX. If you're a buyer for the next 4 decades, how is that good?
Yeah.
It's good for your parents, your grandparents. It's not great for you.
Market's been weird though because it just goes up every day a little bit, and so it feels like cumulatively we're up 18-20% year to date, but it's boring. Nothing's happening. We're not
We need
going
the excitement back.
right. Like we're there's not like euphoric buying, and a lot of the names that had euphoria, like the SPAC names, the non-profitable tech names, they got f***ing annihilated. Right. So even the S&P is at all-time highs and it's hovering near there, but a lot of like the go-go stuff got crushed.
Yeah.
What's funny about that is those aren't advisor areas of the market.
No.
Like advisors don't own the SPAC ETF. Like
Or the moonshot ETF.
moonshots, electric vehicles. Like advisors don't build those as big components in portfolios. So that is a purely retail phenomenon on the way up and on the way down.
Yeah.
Right.
100%. You make a great point. I had clients asking, during the time, like, why aren't we doing more into that space? And I just said, I just don't, due diligence and research, there's no way you can cover all those names and really, unless you're buying broad market in those SPAC space and buying an ETF, but there's no way you can know everything about all those companies and fully be able to allocate enough cash where you feel comfortable with conviction on that. And so there was just a space I stayed clear of. And I feel vindicated a lot of times right now because we're looking at year to date, the SPAC ETF's down 20%.
You know what's so great about that? This will happen again and again, and you'll be able to point to, remember I talked you out of buying Chinese battery companies? like remember I talked you out of a SPAC that's since been cut in half?
100%. 100%.
Not that this will definitely be the same thing, but just remember that that's a very real possibility.
100%.
But also the stock market is so boring these days. Like not just, even though it's going slowly up.
Speak for yourself. I'm on fire right now.
You are. But it's boring relative to the crypto markets and the NFT and the metaverse and the DeFi. Like that's where all of the excitement is right now.
And that's why I'm focused so much on COVID instead, because COVID's exciting again.
COVID's back.
COVID is like back
Listen,
in many ways stronger than ever.
I was in Texas. I was in Colorado. I was in Arizona. They
So
all
you might be infecting us
So
right
what
now.
you're saying is like
I
talking
was safe
directly
there,
at
guys.
us.
Don't worry.
Okay.
So Ben has
You
COVID.
told me you had a green wristband, but okay.
Ben is Ben is like no joke getting wrecked by COVID, and I guess if you're vaccinated and you get COVID, is that the Delta variant? Is that what it is?
Yeah, yes.
Right. So
It's a variant. It's going to be a variant.
it's kicking his ass right
Ben
now.
is on day 4.
And he's in shape. He's got pecs. Like if I like.
He has like veins in his
working out.
arms.
Yeah. So no, it's no joke. Like he's not doing very well right now. I mean, he's going to be okay, but he got really sick.
No, it's scary. I think you have to still. act safe,
Yeah.
and be cautionary, right? When you go in the situations, wear masks, distance,
Or-
do what you got to do.
No, I'm just kidding. There is no or. No, but when I say it's like stronger than ever, the breakthrough infections are f***ed up. Like that wasn't supposed to be as prevalent. I understand 95% effective means 5 out of 100 people will get a breakthrough infection.
Yeah.
I just don't like to hear it about people I know.
Yeah.
But
And
also, I
that's
guess
what's changed. I
But
think.
for the most part, like obviously Ben and many others aside, like for the most part, it's much less dramatic the effect that it's having on you. If you're not vaccinated, and you get Delta, like good luck.
Yeah.
Like it's really nasty.
And being in those states where people don't believe that they should, those are the ones that are going to get hit.
But those are also the ones with the spikes in vaccination. Because people could say whatever shit they want on Facebook, but they're also not. They might be stupid, but they're not crazy, or they might be crazy, but they're not stupid. Like, I think there are a lot of people who are just like quietly seeing family members get this and going and getting vaccinated, which
Yeah,
might
they're
be a
not
silver lining.
vocal.
So that's the thing. Like there's cognitive dissonance, but like so you could like think COVID is not a thing until it hits you or your family or somebody you live with. Like at that point, you got to be like,
You'd be surprised though, because not really. Like the president didn't change his rhetoric or his behavior that much pre and post getting COVID. So it's not definitely that it really hits home and makes you change, at least the way you speak about it outwardly. I don't know.
Well, now that Pfizer is FDA approved, hopefully that will sway some of the.
Right, a lot of these anti-vaxxers are very big on reading clinical reports from Pfizer and FDA approvals. It's true. Consumer confidence took a hit, 6-month low in August, and the worries cited were soaring COVID-19 infections and higher inflation was number 2. But people are still traveling.
They want to go on vacation.
Yeah.
Yeah, so I threw this article in the doc from the Wall Street Journal because it reminded me of financial advisors.
you just went on vacation.
I did. I just got back from California. And we worked with a travel agent. So I use a travel agent. Like, I'm not a Luddite. I understand Expedia exists, but I don't pay her. She's incredible. She gets paid by the hotels. I don't care. So why wouldn't you use a travel agent to book a trip that's going to be
You
expensive?
know why? I think most people don't know that that's an option.
I agree with
For
you.
example, when you told me that you used a car broker, I didn't know that was a thing. I had no idea.
Oh,
I did not
know that was
either.
a thing either.
So car brokers are a thing. Last year, I wanted to get a Jeep Wrangler.
Did you call Richie?
No.
Michael, that was the car I drove in high school.
Well,
Double door Jeep Wrangler.
You can't
He
get.
bought yours.
You can't. I drove a Buick Regal.
Is it pink?
It's actually electric blue. It's very cool.
I drove a Buick Regal, which is like the oldest mom mobile ever.
Yeah.
But you couldn't get a Jeep Wrangler because they were sold. Nobody was making them. You could get them for like 30% more expensive. So anyway, I was like, I don't care. I'll just get a Jeep Grand Cherokee. That's fine. And I was negotiating. I said, wait a minute. This is so annoying. Like the back and the forth. So a broker, I was on the phone with him for 20 minutes. He found me a car 2 days later, drove it to my house. It was $150 or something less than I was quoted. No brainer. But most people just don't know that that's an option.
Brokers are,
Not know that's
badasses. This guy used to
the
own a
fee,
dealership.
though?
Nothing.
There's
They
nothing?
negotiated with the dealership.
He's getting a piece of
my
the lease. You don't even
God.
see it.
Oh.
So I exaggerate. It wasn't that much of a big savings, but it was a significant savings. And the time and energy, it was like, just offload that.
Yeah.
Give it to somebody else.
Yeah.
Fantastic.
So
Yeah.
people still want to travel. Now it's a pain in the ass again. Like now the rules are changing again.
Yeah.
Things are getting canceled. So people are like rediscovering travel agents. And travel agents, like if they ever had a moment, now is that moment for all of the millions of people who
That's so
want
interesting.
to get on with their lives. So it reminded me of financial advisors in a market panic. Like where all of a sudden it's like, all right, I do it myself. Wait a minute. I am about to do something really stupid because I'm terrified. Let me talk to somebody. Like that is the biggest source of people coming to us.
Yeah.
They know we exist. They read ours, but like when things get ugly in the markets is when they really just want to talk to people. So this is Wall Street Journal. Quote, with the pandemic, our credibility and our necessity have gone off the charts. And I think we're now advocates, says Jennifer Wilson Buttigieg, no relation, co-president of Valerie Wilson Travel. Travel is possible. It's just difficult. Right. So it reminds me of like a market panic. Investing is possible. It's just difficult. And I highly recommend to anyone that's not using a travel agent, they don't charge you money.
I never even knew that.
How do you find,
They find you deals.
how do you find a travel agent?
This was a recommendation from Sprinkles went to University of Michigan. Her best friend, who also went there, grew up with this woman.
So you ask around. You ask for a recommendation. Ask friends.
Friends of friends.
Yeah.
And
gonna do
like
that.
basically, she's like, "Where do you want to go?" She's not like telling us, "Oh, have you thought of Bermuda?"
Yeah.
My brother lives in California. I had to go. I was supposed to go last year. He has kids growing up that I'm seeing on Instagram. Like I had to go. So given that I had to go, that's when you say to somebody, "What's the right way to do this?" And she like gets taken care of by the resorts, the restaurants.
And so is it more that they're figuring out, okay, you travel at this time, this is the best rate, everything, that's the value add, or is it just more of the time?
Yeah. Like and then which hotel and who's running a deal and who's most likely to change their price, hold off. Like who will negotiate with you and who won't, like that kind of thing. I don't know I don't want to know that.
And if it
stuff.
doesn't cost you anything, it saves you time and effort. That's
love that.
amazing.
Yeah.
Right. So I think there's this built-in assumption that everything on the internet is cheaper, more efficient. Not really. Not really. So it's nice to have experts, and I just thought that was a nice analog to what a lot of people working in our space do. Speaking of our space, Amelia, your time to shine because you are but you're covering the deal making every day, all day, every day. What's going on right now?
We get an email every day from CityWire.
It's crazy.
Another M&A.
Yeah. Ian Wennick is our rock star reporter breaking these.
Shout out to Ian.
Yeah, shout out to Ian. It's been crazy.
By the way, I know how he breaks all his stories. He just doesn't leave you alone until you talk to him. Because I get my regular email from Ian every time we file our Form ADV.
Yeah.
I almost could set my watch by it.
Yep.
So all right,
he's
on
the
best.
those. And I think you're seeing a mini surge right now because people want to get stuff closed by end of quarter. But it's nuts. We reported yesterday 4 deals. Beacon Point acquired a $500 million Seattle hybrid RIA. Allworth bought a $367 million Maryland RIA. EP Wealth bought a $130 million Bay Area practice. And then Focus added another partner firm to its network. And I think in all of these deals, they're joining these firms for different reasons. The one I thought was the most interesting was Beacon Point because they acquired Rainier Financial Group in Seattle. They're a hybrid, so they use LPL as their broker-dealer. And they said they left because LPL didn't have enough tech offerings available. So that's why they joined Beacon Point. And I think that you think in the broker-dealer world too, when you're using these big platforms, right, you're getting that access. But they said no, they had a CRM, InvestNets, Tamarack, planning software, eMoney, and they just didn't have those available.
That's what Beacon Point is bringing to the table.
Yeah, those are the 3 they mentioned.
Tamarack, and eMoney.
But how much, not to be so cynical, how much do you believe their reasons for leaving? Like, is it really tech or are there other things that we might not know about?
What do you think it was? Like sexual harassment?
No, financial arrangements.
Oh, well, it's always that. Yeah, I agree with you.
I think that's
it's payout.
Right.
All the time.
Yeah, that's like the bigger reason, yes. But I do think tech is another reason. And the funny part is
we needed more tech. I'm using air quotes, podcast listeners. They needed higher payout. Come on.
That's what I'm saying.
But the funny thing is we wrote a story today about a Ray J group of advisors, I think they're around $600 million, joined LPL. Guess what the reason was? For the tech.
So it's not. So maybe it's not the tech.
So maybe it's not the tech.
Amelia, these sound like small deals. Like no offense, $130 million acquisition. Like we have advisors, like a practice within our firm. Like is that really an acquisition or is that a hiring?
Yeah, they call it an acquisition, yes. But I think it's interesting because that's the 16th they've done since 2017. So
we call those. Don't they call those tuck-ins? Like tuck-ins. Like it's not a new office. It's like let's tuck this into our Seattle.
Yeah, in some cases, yes. Like in Beacon Points, they're opening their presence in Seattle. They didn't have a presence before. So when they acquired that firm, they're opening in that market.
Do we ever know, obviously we can't know the specifics, but are these advisors getting a check to leave? Are they getting higher payouts? Do we know
the Focus deals are?
Ask that.
Focus
They're
deals
selling
are.
A piece of their,
yeah, so Focus, they sell all their assets and then around 50% of their cash flow goes to the company.
So right. So if you're doing a deal with Focus, it's probably for your retirement.
Yeah, exactly.
And it makes sense because it's instant liquidity, and they're probably better at running an RIA than you are.
Yeah.
Because if you're like a boomer advisor, you didn't keep up with the tech.
Yeah.
Like for the most part, right? So
I'm always curious, like what they tell their clients like, oh, we were bought. It's essentially you were bought. Obviously, it's not said that way, but like,
congratulations, you got bought. I got the check, but you were acquired.
Well,
client.
I think that's what they say, right? They say we have more enhanced offerings by
True.
joining this bigger firm, and it's going to make it easier for me to manage your money, and it's going to make
succession.
Yeah.
Yeah.
Right, which is true.
Yeah.
It is, and I think when you join a bigger firm, you do get that. You get the succession planning, you get better portfolio management, risk, all that.
No doubt.
Are you guys seeing a difference in the level as that was brought up? So there's the under $500 million asset deal versus is there a difference in how those transactions are going? Are they growing more in the sub 500 market or the higher?
It really ranges. These deals have been going on a lot in the last few weeks, and it's across.
Years.
But I think really ramped up. Definitely, years. But I think in the last few weeks, you've seen it a lot. I think in October, November, we're going to see even more. But it really ranges. I mean, the ones we really focus on, I think, around the 500 million. That's big. But
let me ask you, all of you, a question. Yeah. Do we think this is a result of people seeking bond alternatives, and or is this part of it's cheap to borrow money, so they're going to do these deals? In other words, let's say the 10-year was at 3%. Would that slow down these deals?
Yes, because this is all being funded by private equity firms who have to put money to work. Nobody is like paying out of pocket for these deals, or not nobody.
But
they're not paying out of cash flow. They were given money from private.
Yeah, every one of the firms that I listed, they're all PE backed.
Right. So
it's cheap borrowing money. They're borrowing for cheap.
This is part of the cheap money phenomenon. But then I also do think it is demographic. It's older advisors. Like there's not a lot of ways to get out of your practice and get value for it. There's not a lot of ways. There's one way. Well, there's two ways.
What else?
Well, if you actually did real succession planning and you can be bought out internally by your employees, which is what we're attempting. Wish us luck. But then there's like, I'm 59.
Yeah.
I don't want to be doing this in 10 years.
Yeah.
I should start engaging. I'm not big enough for private equity to be interested in me. So I probably have to sell to an aggregator. And it's fortunate there are about 20 of them that can do billion-dollar acquisitions. $1 billion under management acquisitions, I should say. But like that, I think, is being enabled by cheap money. It's just another manifestation of the same thing going on all over the economy.
So what happens in a bear market? Are acquirers even more aggressive because they're getting to buy a company on the cheap? It's like, if we're paying you a multiple of revenue or EBITDA, or whatever it is, let's wait a quarter. Let's wait 2 quarters, and then we'll scoop you a little bit cheaper.
Yeah. The deals haven't slowed down, right? We just talked about this. Like they are going on when the crash hit in February last year. Like they have accelerated.
I think they take long enough to do that you don't stop it because of market volatility, right? Like it's not like an IPO where you're like, oh, this won't be well received. Like it takes a long time to figure these things out. So I don't think they'd be like risk. They would be at risk because of the market.
I wonder. You mentioned succession planning and older advisors getting out of the business, but is there? On the acquirer side, what are they actually looking at as far as demographics, just the growth of the AUM, or what is actually pulling them to these certain companies? Because I just find it, especially these deals, that just from looking at face value, it looks sort of random. But is there something that they were looking at that made all those deals attractive?
I got to be honest, like
just getting more assets.
I feel like it's just a land grab, and these people are kidding themselves because there are probably some high quality firms being acquired, but then there were probably a lot of situations where it's like, yeah, I was a broker at Merrill, and then I hung my own shingle, and I'm tired. My clients are old, and many of them are passing away, and many of my accounts are in decumulation mode.
They're not buying 85-year-old advisor books.
I think if you're buying boomer advisors, their clients are like 70s and 80s.
I think that there's been enough transactions that they have a really good sense of the industry, the churn rate, like what they're paying for. I would be curious, do we have any sense of the returns that these PE companies are generating for their investors?
That's really interesting.
The hurdle is low.
That's really interesting.
If the risk-free return is in terms of real rates 0, how high could the hurdle be?
Yeah.
That's
an interesting
But do you think
question.
investors are looking at these PE companies as bond alternatives? I don't know. I don't think so.
Well,
it's not the same sleeve.
It's like trillions of dollars. So like they have to put it to work. This is one of the easiest places to put to work. I don't know. What do you think is going on? Like, what are they what are they looking at when they evaluate? Let's say there's 5 different firms they could buy.
Yeah.
What would make the what would make the final deal they do? What would be the reason for it versus the other firms?
Well, I think one part of it is just the national footprint. I do actually think some of these RIAs, they want to be everywhere, right?
Yeah,
So
Like Hard Rock.
Which is smart, by the way, because if we're all
I love
remote
Hard Rock
anyway,
Cafe. Yeah.
like if it doesn't matter where your advisors are and where your clients are geographically anymore, which I don't think it does. Like Delano could open an account with somebody who lives in California or New Jersey. It would make almost no difference other than what time of day you call.
Exactly.
Right? So that part makes sense. What else?
Yeah, because I think they look for the size, right? They look for, I mean, that's a huge one, right? How many assets they can bring over. Everyone talks about culture. They have to be the right partner, the right fit and all that.
I'll take the under on that.
But I do think it's like the firms itself, I mean, it varies from RIA to RIA. Some do have to be sophisticated. Some have to have their own plan in place when they're retiring and what they plan to do with the business. But it really varies. I mean, some just want to pick up, and they'll acquire any old FA that wants to break away, and others are more diligent about the process.
Do any of these are smaller RIAs selling themselves to a larger one? Do any of them take stock, or are they just really taking cash?
It's a mix of like, it's either cash, equity, right? It varies deal to deal.
Okay.
I don't think there's like a one.
If somebody took all cash for my like I went to acquire someone and I said, you have a choice. You could have a mix. We could have all stock or you could have all cash. And they're like, just give me the cash. That would be a bad signal to me.
Yeah. And the one with Allworth.
Give the, just in case. Just give the
Just in
cash.
case.
Yeah. The one with Allworth and the Maryland RIA that was around $300 million, that deal was financed with a mixture of cash and equity. So
Okay. I guess it depends on your age whether or not you're willing to take equity in a larger RIA.
Yeah.
Because it's almost like re-upping.
well, that's another part of it, right? What does the deal look like? I mean, some of these deals we don't have the details on the actual transaction, so how it was structured, but I think with that one specifically, right, that was a mix. So if the firm is willing to take a stake, right, are they going to invest in the company? What is that structure going to look like? And you have so many firms now working like Park Sutton Advisors. Their whole business is the deal, right? How to structure a deal. I mean, now you have firms that are just doing that. They're not providing any funding or anything like
consultants?
that. Exactly, right? Just consulting on the deal. So now you have a business on that, right? That's another whole.
Are you
growth
skeptical? Like you started a firm. You're going to build a culture, and you're going to. I feel like that's what we're trying to do. Like, are you skeptical that 5 founders can come together into one larger firm and like actually function and get along with each other if they didn't start off as partners? I don't believe that they can really do that.
That's interesting, but you'd have to look at how much anonymity, how much autonomous the 5 partners are. So if they're acquired, brought in, they're still able to kind of maneuver the way they've been maneuvering. But does that, the acquire will look at it as you have to ingrain into our culture and you have to start to, ingrain into how we do things. So I think.
Can people change? Can an advisor who's been doing this for 25 years all of a sudden become ingrained in somebody else's culture?
It would be hard. It'd be really hard. There had to be some level of ability to have agency to do what you've been doing, and maybe it fits in their structure.
Picture Barry Ritholtz, like we sell to Peter Maluk, and then Barry has to become a creative planning.
No. Durant lasted 3 seasons in Golden State. It doesn't work.
No.
I thought you were saying Joe Duran last 3 seasons at Goldman Sachs. That's what I thought you were about to say. He's been there longer than a lot of people predicted.
I'm skeptical.
All right.
Exactly.
So what's going on with the SEC overview of what is this, Twitter, social media?
No, this is like, all right, DEPs. This is a new, get used to this acronym. Have you guys
I have
written
to
about
look that up. Yeah.
Have you guys written about this yet? You will.
No, the
Digital Engagement Practices, DEPs. So Gary Gensler gave a talk about just the way that apps are driving investor behavior and where those and where that might actually be very conflicted. And to me, this is no different than, it's not a boiler room because people are voluntarily doing this themselves on apps.
Yeah.
But if you arrange the app a certain way to push people into certain outcomes, arguably there are boiler room-esque aspects to this type of thing.
Are you talking about like confetti when you make a trade?
Yeah.
Yeah, I think that stopped,
Or
right?
we'll give you free shares
stock.
of this if you do an options trade, or like
well, if you open a Robinhood
we had sales
account,
contests when I started. Like literally, if you could sell 15,000 shares of this closed-end fund, you and your wife are going to Hawaii. You can't do that shit anymore. So now in an app, it's different than like guys in ties on the phones, but is it that different if you're building technology and engagement in such a way that you're pushing people into a certain type of
so they're
behavior?
talking about Robinhood and other trading
Yeah.
apps.
Because if you open a Robinhood account, you get an actual stock, right? So that can drive that
Yes.
frenzy. You need to trade. You need to win the game.
Yeah.
So it can lead to riskier behavior, which makes sense. But
All right, here's Gary Gensler. Quote, in the last few years, we've seen a proliferation of trading apps, wealth management apps, so it's not just Robinhood, and robo-advisors that use these practices to develop and provide investment advice to retail investors. In many cases, these features may encourage investors to trade more often, invest in different products, or change their investment strategy. So this, to me, applies to Wealthfront, Betterment, Schwab Intelligent Portfolios, Vanguard Personal Advisor.
For example, when you open your Robinhood app, as I do 97,000 times a day, you see
open right now.
you see it's not open. You see your daily performance. You get a snapshot of like the most recent 6 hours or whatever it is.
How'd you do in the last 6
So,
hours?
and it fills the screen. So it could look like you're falling off the cliff. And it's like, oh, I'm down 75 basis points.
Better trade harder.
You know, so that's an example of behavior that could be.
I better trade bigger.
no, it would make you trade more if
Of
you
course
see that.
it would.
You know what it does? Actually, you ever been in a casino? I'm not a gambler, but you ever play blackjack and you're like down to your last 4 $25 chips, like down to your last 100?
Let it all ride. One
Put it,
hand
just put it all in
I
one.
do the slot machines.
every time.
Same principle. Like, yeah, I got a handful of coins left. Forget it.
Yep.
Let me put it in. Right.
Weekly options.
You said something interesting to me, which obviously they are pulling that in for retail investors. But you also said something interesting on a Clubhouse event with me. Is it the discretion of when you have discretionary income? Are they really fueling it in the sense of there's giving people are going to do this anyways, and whether it's gambling in sports or gambling in different areas, are these apps, whether it's Robinhood, fueling it, or are they just kind of giving people the ball and they're just shooting where they were going to shoot anyways?
The answer is probably both, right?
That's a good question.
It's not either or. They're both.
And also, there are some apps that might attract somebody that's more likely to gamble than other apps.
So you are responsible for your own decision making. We're all adults.
Yes.
But there are certain nudges you can make. Like if you go to make a transaction on Betterment, if you go to sell on a down day, they'll tell you, okay, you can do this, but it's going to cost you X dollars in capital gains.
Yeah.
Do you still want to transact?
Yeah.
Other apps don't have those guardrails. And in fact, they go the other way and try and encourage you to trade based on the way that they're presenting your data.
Yeah.
Yeah. Are you sure you want to hold?
Right.
Yeah. Yeah.
Hello. You've been inactive for 17 days.
Have you seen treasury rates lately? Are you sure you want to stay long these stocks? Speaking of gamification, what's this about?
Funny. This is funny. I just put this on here because on Monday, China announced that minors can only play video games for an hour on Fridays, weekend, and holidays, and it's banned during the week. Why it made me laugh was we had the same policy in our household growing up. So-
What video game system were you classically trained on? I feel like you're a
Guess.
Nintendo 64.
Yes, but also, guys,
Super Nintendo?
Sega Genesis.
guess my favorite game.
Duck hunting.
No, this isn't on Nintendo.
You guys just go Super Nintendo, Sega
This
Genesis.
is on
Sonic?
Nintendo.
A Nintendo? What?
I almost
Super Mario?
finished
Not
it.
on Nintendo, no. World of Warcraft.
That was your jam?
Yeah, I was a WoW girl.
Did you
Yeah.
play play it on the computer?
Let's just say I bought some gold on eBay.
Were you like a Viking?
Wait, did you play
No,
on
I was
PC?
so terrible at it. I would die. Yeah, I played on a PC. I would always be in the graveyard trying to get out. If you guys played, remember?
I never got into
You never got into WoW?
I was into
He's
girls, like basically. No, like when I would have been into video games, I was like very much like not on the computer. I don't know.
I know.
There wasn't a computer.
Yeah, it wasn't a computer.
Yeah, we couldn't though. I saw this and I showed it to my mom. I was like, "Mom, you're ahead of China. You restricted us during the week, only weekends."
And
I mean,
you turned out great, so maybe China's onto something.
This is what happens in the communist society.
Yeah.
I don't think they're going to actually police it, and I'm judging that only based on Chinese video game stocks. I actually looked this up. They're higher. They got killed, but Chinese tech stocks get killed every day anyway.
Yeah.
They're actually higher now than when this came out a couple days ago. So
That's interesting.
either investors are looking past it and they're like, well, whatever, or they don't believe it'll actually be enforced. or I don't know. But all right, let's say. So what do they want people to be doing if they're only playing 90 minutes on a weekday?
Sudoku.
Homework.
Homework.
Sure.
Could you imagine us trying to do this in the United States?
Would never work.
It would never work.
You can't even do this in your house.
No. I was a big gamer growing up. It was, I played at 64, GameCube, all the games. And my brother's still a gamer. And I'm actually gonna get a PS5. My girlfriend wanted to implement a 1 to 2 hour week because she knew, she did something. But I don't think you can implement it here. We're actually going the other side. Esports is just a bigger thing. And I think, I think it's just a great way. They actually have studies that show, I didn't read them, in detail, but they have studies that show that playing video games is actually helpful cognitively and different things. And you're supposed to burn calories a little bit when you're pressing it. So I don't know. We just can't implement it here.
My son was in OT when he was in kindergarten. Do you know what that is? Occupational therapy. They thought, and maybe they were right, that like his hands weren't working. Like they would give them tests. They would give them OT tests. Like use a pair of scissors, fold this into a triangle, like shit like that. And he literally couldn't do some of these things that other kids his age could do. We were terrified. And then he got the Xbox. And I was like, what are these people talking about? This kid's beating me in every video game we buy him. Like crushing me in NBA 2K, crushing me in Madden. I was like, he doesn't have OT. He doesn't need... And so, of course, my wife, who's smarter than me, was like, yeah, he's probably so good at this because they took him out of class to do occupational therapy. Like they would pull him out of his class.
Oh, wow.
So I don't hate video games. And I also think Fortnite might have saved him as a person during the pandemic. It was the only way he could see his friends for like weeks and weeks on end. They weren't in school. All their sports were canceled. He lived on Fortnite like 6-7 hours a day. And never did I even consider taking him off of it because what else was he going to talk to me?
Yeah.
Like he needs to be talking to his friends.
Yeah.
So him calling his friends like MF and FU and like I'll kill you and like I'll come to your house for real and kill you if you do that again. And what's wrong with you and you suck. Like just listening to that coming from the basement, I was like smiling. I was like, okay, this kid has a social life.
It's a thing.
So I'm pro video game. All right, I think it'll be tough to top that, but we're going to go into soapbox. And I'll tell you another thing.